Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights, US President Election Special Edition as we count down to tomorrow, pivotal day for the US economy, as well as the global economy in some extent. So before we start our Daily Dose of Market Insights for today will be the Tuesday, the 5th of November 2024. So before we start, as usual, let's take a look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's kickstart what has taken shape yesterday in terms of news flow, economic data, if there's any, and as well as the performance of the broad-based cross-asset classes. Then for this particular segment of Daily Dose, we'll be covering one particular US presidential election insights and how does it potentially could impact the cross-asset classes, especially we count down tomorrow Singapore time at around 6 to 7 a.m. where the first we call it results of some of the earlier Eastern Coast US states starts to actually come into the mainstream media or to see who is leading in that particular state. And lastly, we'll touch on the, as usual, the short-term intraday technical outlook with all those pivotal and support resistance levels on those broad-based cross-asset classes. And we'll round up with what are the key events data to look out for today that could potentially impact this broad-based cross-asset classes intraday performance. All right, so let's kickstart with yesterday. So yesterday was rather a dull session. Why? Because we know that tomorrow will be a pivotal day for the global markets, which is the outcome of the US presidential election. Potentially, the impact could be feared right early at the start of tomorrow Asia session at around 7 a.m. all the way up to 11 a.m. Singapore time as those polling results starts to trickle into the mainstream media. So with that, let me share with you firstly on the performance on the broad-based cross-asset classes. So the performance of the broad-based cross-asset classes yesterday were more of a risk-off scenario where the SPX, the NZD 100, the Dow Jones, with the exception of the Russell 2000, all closed in the red. But for those who follow our daily dose since last week, we do highlight over here is that there actually is already from a technical perspective, there's some inherent weakness that's being displayed on the NZD 100. Then from there, it actually have a negative spillover impact on the Dow Jones Industrial Average. So very interestingly, yesterday at the start of the intraday session, we see a push up on the SPX, the NZD 100, as well as the Dow Jones Industrial Average. But all three of them unable to keep up with the opening upside momentum and smack right down and close in the red and close, I would say close to the intraday low, especially on the NZD 100, right? Very close to the intraday low, similar on the SPX as well, right? The intraday low was formed at around 1 a.m. hour Singapore time, so it closed quite close to the intraday low. So significant, there is some form of short-term hesitance by the bulls to push the prices higher on these major US stock indices, given the up-and-coming key political event risk, which is the US presidential election outcome. So SPX is down negative 0.28%, the NZD 100 down negative 0.35%, and the Dow Jones Industrial is down negative 0.61%. Russell 2000 is the outlier, is up 0.4%. I want to mention about this Dow Jones Industrial Average. So actually yesterday we do have a positive news flow related to the Dow Jones Industrial Average, where we start to see this, the AI juggernaut NVIDIA was set to be part of a Dow Jones Industrial Average component stock, replacing Intel. All right, so basically it will start on the November the 8th, this Friday. So this Friday, NVIDIA will be part of the Dow Jones Industrial Average component. But despite this positive news flow, the Dow Jones Industrial Average did manage to actually see any positive gain yesterday because of the key risk political event factor that is overriding this. I would say that more equity specific and centric factor. All right. So, but do not forget, the Dow Jones Industrial Average is price weighted, it's not market cap weighted. So, very unlikely the NVIDIA will be the top 5 component stock of the Dow Jones Industrial Average, more of a mid-level instead, because of its stock split recently. Because the way Dow Jones Industrial Average weight is component stock, it's not market cap, it's based on price weighted, very in contrast with the Nasdaq 100 and the SPX 500, which is market cap weighted. All right, so that could also be the fact that why NVIDIA does not have a positive feedback loop on the Dow Jones Industrial Average, because it's very unlikely it's going to be the top 5 weighted stock on the Dow Jones Industrial Average coming this Friday on the 8th of November. And what we could see across the other FX market is that very tight trading performance on the FX on the dollar. So if you were to let me share your what we see over here in the FX market again. Okay, let me open up the chart. Okay, so what I'm going to show you now is the, as usual, the 5-day rolling performance of the major FX dollar pair. Okay, so what we could see over here, let us. All right. Okay, 5-day rolling performance. Okay, so just take it the fact that this is as of now we are speaking, because I don't want to waste time to adjust it. Of course, it tends to hang every time while we are speaking over here. You just go to webinar thingy. So what you could see is that this 5-day rolling performance as of now, 5th of November, starts to be in the trading in a very tight sideways range. So very importantly, the dollar strength that was seen in the last 3 to 4 weeks got dissipated since the start of Asia session yesterday, and after that it continued to trade in a very tight sideways range ahead of tomorrow key risk political event, which is the outcome of the US presidential election. So the reason of why the dollar is trading so tight over here, because there's a risk that Trump winning odds are get lesser, and there could be a potential neck-to-neck race. So I'll share more about that US presidential insights. And what we could see potentially as well, gold also trading in a very sideways range fashion. Oil price continues to remain well supported above the $68 per barrel on the West Texas crude oil. Okay, and one more particular news flow is more pertaining to the Hong Kong and the China stock market, is this ongoing China MPC Standing Committee meeting that kickstarted yesterday, and the conclusion will end on Friday, 8th of November. And before the start of this MPC meeting, some of the local press in China has already reported that the end outcome of the amount of fiscal stimulus that the China policymaker will approve will pretty much dependent on the outcome of the US presidential election. That means, i.e., there could be higher fiscal stimulus measure if Trump were to win the White House, potentially to actually counter Trump proposed higher tariffs towards China products heading into US. All right. So yesterday, we know that at the end of every day, there will be some local China press reported what is the agenda of each day of the meeting. And yesterday, through South China Post, SCMP, there was actually a discussion about this debt swap plan on the first day of this NCP standing committee meeting. So they are reviewing local debt swaps over here. So basically it's some form of helicopter money to stock up or to actually top up the coffers of those province government cash shortfall. Indirectly it's mean that, but no amount was being discussed yesterday on how much the amount of this local debt swap over here. So potentially more details could only come out at the last day of the MPC meeting, okay, 8th of November. So as of now, there could be some form of rumors talking about how much fiscal stimulus that is coming out from China, but this doesn't mean to be, it's very unlikely to be concrete. So most analysts and consensus right now is ballparking a fresh stimulus measure close to 2 trillion yen, maximum up to 10 trillion yen. Okay, also dependent on the outcome of the US presidential election. But in between now and then, there could be some rumors circulating around the social media, but the concrete announcement or the details of the fiscal stimulus, and as well as how this particular fresh stimulus is going to be allocated were only likely to be announced on Friday, which is 8th of November, and they could also drag on to the next couple of weeks, depending on how the China top political policy maker wants to actually funnel out this announcement. All right, so that is the key news flow that and its impact on the major cross asset classes intraday performance yesterday. So now let us now talk about the US presidential election insights. So we know that global macro traders or the markets itself has been tracking this betting odds of who will win the White House. All right, so one of the betting market that is very popular with traders right now in terms of financial market traders or global macro traders is Polymarket. So those who follow our daily dose of market insights for the last couple of weeks or 2 weeks or so, I've been looking at this particular odds, and this odds is actually driving the movement of the Trump trade. That means firstly, what is Trump trade? I repeat again, Trump trade narrative was in the forefront in the last 2 to 3 weeks. That means i.e. higher US longer term treasury yield, the 10-year US treasury inching up much higher due to the fact that Trump preference of higher trade tariffs, not only against China, but against the rest of the world, as well as lower corporate tax cuts, which could potentially, no, sorry, but higher corporate tax cuts could potentially lead to a widening of the budget deficit in the next 5 years for US. Net result is a higher inflationary environment in the United States that could actually reduce the propensity or the magnitude of this ongoing interest rate cut cycle undertaken by the Fed. That means the Fed will be tied, the hands are tied. They may not be able to reduce interest rate as much as what market is expecting initially 3 to 4 months ago. So that lead to a stronger dollar. So with a stronger dollar, we start to see emerging market stocks or the rest of the world stocks starts to actually underperform the US market in the last 3 to 4 weeks, and also the US markets potentially also going neither here nor there, because so far since hitting early September, the SPX, the Dow Jones Industrial Average, and even the Nasdaq 100 failed to make fresh all-time high due to there is a potential risk-off impact from higher trade tariffs that could come into next year. All right, but right now this Trump trade has starts to get diluted or start to get thinner down. Why? Because of based on the poly market betting odds is now showing less than 60%. All right, so in the last 2 weeks it was hovering 60 around above 60%, and it went up to as high as 67% on last Thursday and Friday. So it's only over the weekend, this weekend on Saturday, Sunday, Trump betting odds starts to actually inch downwards. If I could share with you over here, okay, it starts to inch downwards. All right, so let me expand my screen so that you're able to see this. All right, so let's go to 1 month or 1 week, much easier to see. Okay, so notice over here, it starts to get thinning down at this point in time. All right, so now it's trying to inch back up towards today's will be the polling day, but still remains below that 60% level. So that's why we start to see a portion of the Trump trade narratives to get unwind. That means the dollar strength starts to get dissipated at yesterday's Asia session and didn't make any headway throughout the European session and the US session. And gold also try to trade sideways as well, because gold is also part of the Trump trade as well, where market participants expecting gold to actually rally much stronger. But net overall, whatever who wins the White House, in the longer term, gold major uptrend will still be intact, because the budget deficit in US will continue to widen over the next few years. It's only that under Trump administration, it will widen much further due to his policy. And what's interesting over here is that all these betting odds right now, if you look at the betting odds right now, going back to again, on the key 6 swing states. All right, so market participants will also be very fascinated on the result of this six swing states, because these six swing states over here will determine who will win the White House over other states. All right, higher probability based on the calculation of previous data. And one of the key most important swing states will be this one called Pennsylvania over here. Why? Because Pennsylvania is having the most number of electoral votes, because in US, right, every particular state has different weightage in terms of the impact of the outcome of who will win the White House. The states that's higher electoral votes will determine a much more significant impact of who will win the White House. So among these six swing states, Pennsylvania has the highest weightage of 19 electoral votes. So these 16 swing states over here, previously Trump in the last 2 to 3 weeks was hovering above 60%. And right now, yesterday, actually, if you could actually go to this, we see as well, over the weekend, it actually dropped. No, it dropped drastically over here from 63. Then during the weekend, it dropped down to 49 at one point in time. All right, 49 over here. Okay, 49. Where was it? Yeah, 49. Then Harris was leading at 51 to 49, Trump 49. And right now, as we are speaking, because this is live, Trump is now leading back up close to the 60% mark again. All right. So overall, what you could see over here is that some may argue that this betting markets over here tends to be a bit manipulated. Yeah, which is true. And if you compare to what happened in the betting markets in the last 2 days over the weekend, it's trying to actually normalize or what is being so-called translated into the polling market. So what is polling market? Polling market is survey based. So a lot of pollsters actually ring up potential, we call it voters, to find out their preference, who will they vote, and based on their own mathematical models, they come up with the polling result. So it's like survey based. Whereas betting markets is based on betting odds and the number of money that is at stake on who on the wager against each other candidate. So from there, it's real money at stake. So there could be also potential some form of manipulation potentially going on. But what we could see over here is that the last 2 days of Trump very large winning odds in the betting markets has started to slowly normalize, and they try to move in line with the polling odds over here. So based on survey base, right? Survey base, what we could see over right now. So this should be the last poll. Because poll is not live, but they were close. So yesterday, all the polls they already more or less done their so-called exit polls already. That means there shouldn't be any more poll that's being done today. All right. So based on yesterday, the RCP average based on real clear polling, where they take a couple of major polling board, we call it agencies or polling body that does this polling survey, put it at a tie between Trump and Harris, 48.5 to 48.5. All right. And even the top battlegrounds, if you look at, they include in 7 battlegrounds, which is North Carolina, whereas the betting market only included 6. But most important is Pennsylvania over here, which is the key swing battleground states among the 6 of them or 7 of them. It's almost neck to neck, 48.3 to Trump, 48.1 to Harris. All right. So what it means over here is that we could actually potentially see on tomorrow early Asia session that maybe throughout by the time by 11 a.m. Singapore time, there could be no clear conclusion who will win the White House, because potentially the race is too close to call based on the polling market, and we could only wait the results until the later part of Asia session nighttime. That means maybe at the start of the US session tomorrow at 10:30 p.m. Then the result will come in. Or worst case scenario, it could drag on and there could be some dispute going on over here. Worst case scenario will come to a repeat of previously Al Gore versus Bush at that point in time, where it lasted for about, I think there was a limbo for close to about a month before the results are being finalized, who won or who wins the White House over here. So if this scenario starts to take place, potentially markets don't like uncertainty, especially the risk assets. I'm talking about equities. So we could potentially see a negative near-jerk reaction on the US benchmark stock indices. That means a negative feedback loop. And how does I relate that from a intermarket perspective over here? By looking at this intermarket analysis, tying in line with this US presidential insights, is the movement of the VIX against the MOVE index. So this is a very interesting chart I want to share with you guys over here. Okay, so this is the intermarket analysis. I will tie it together with the US presidential insights that I share with you all. So this particular dark pink line, bright pink line over here is the MOVE index. So this MOVE index measures the implied volatility of the prices of US Treasury bond. So if the MOVE index starts to move higher, which is indeed it move up higher already, so once it move higher, it will cause the US Treasury bond price to come down, and the longer term years to push up. So that actually has taken shape last 3 to 4 weeks. All right. So that actually saw the US Treasury bond ETF. This is the price, not yield. TLT, the ticker code, to actually erase off the earlier gains that was seen in July all the way up to September. So these gains you see on my screen over here is due to the start of the interest rate cut by the Fed. But after the move index starts to inch up higher and broke above this key resistance at this level of 38, okay, give me a minute, around 38, 39.25, the TLT, the US Treasury bond price starts to inch down. All right, totally ignoring whatever interest rate cut cycle that the Fed will implement next year because of the higher implied volatility in the move index. And what's interesting here, this move index has now moving in tandem with VIX. So VIX, you all know, is the all famous SPX implied volatility. So one could see the move starts to shape a higher low much earlier during July this year and May this year. And the higher low was only seen much later in August this year by the VIX index, and it's going to inch higher and higher as we head into election day today, US session today, or okay, later today. All right, but it hasn't broke above the key resistance yet at 23.38. But what's interesting over here is that if I plot the ratio of the VIX divided by the move, it started to trace a series of higher low. Yes, it can't shape higher high, but remains on a key support level. Previous breakout point over here now turns into a pullback support, and the pullback support also coincide with the higher low that was seen in December last year and June this year. So this is a weekly chart, it's a more longer term chart. So it seems to us that the VIX is being supported by some deep buyers coming into it to support it to continue form this higher low, but has yet to shape a potential bullish breakout from 23.38. So there is some form of what I call downside tail risk protection in the equity markets being supported by these deep buyers who wants protection through buying the VIX products over here. So what could actually potentially trigger this bullish breakout in the VIX of 23.38 over here that potentially cause the VIX and move ratio to shape higher high, all right, after shaping higher low, will be a potentially delayed outcome of tomorrow's US presidential election outcome during the Singapore time zone at around, let's say, 11 a.m. or 12 p.m. There's still no clear, concise winner. And who knows if also there's a big risk that if Harris were to win marginally, Trump and his supporters were ready to say that that could be a potential fraud. Because why? In the last 2 to 3 days before the weekend, at various states rally, Trump and his allies, so his campaign, claim that based on early voting data, mail-in votes data from some of the 6 swing states, especially in Pennsylvania, that they are very confident that Trump has a higher chance of winning the US presidential election. So there was a lot of we call it a moment of hoo-ha, or we call it rhetoric that's being built up on this aspect of things. So there could be a risk or a bit of social unrest as well, potentially something like what happened in 2021 Capitol riot. That could be a reason because of this kind of rhetoric that's being built up by Trump campaign and Trump supporters to challenge Harris' marginal winning outcome at around 11 a.m. to 12 p.m. Singapore time tomorrow. So when this kind of scenario also happen, potentially there will be market uncertainty. In the very short term, stock punters or speculators will not like such uncertainty, and they will start to actually build up the VIX index. So once the VIX index got built up, a lot of interrelated trades will start to trigger off. That means a push up in the VIX index over here, breaking up 23.38. Potentially, we could see this unwinding of we call it risk on trades. All right, potentially for sure, the direct impact will be further weakness in the major US stock indices, trickling down to a potentially high beta currency being showing that negative feedback loop as well. So high beta currency could be Aussie dollar is one of them, and potentially we could see safe haven currency got beaten up as well, strengthening. Yen will be one of them to take a look at, and potentially also more or less the Swiss franc as well. So gold could be also potentially a safe haven play if this scenario starts to get unfold. All right, so we'll monitor that in tomorrow's daily dose. All right, over here. Okay, so that actually sum up the US presidential insights that I shared with you today, tying in with intermarket analysis, which I just shared with you all on the movement of the VIX versus the relationship with the MOVE index over here. All right, so with that, now let us now jump straight to the intraday technical outlook on the various broad-based cross asset classes, starting with the FX market. So that, let me expand my screen so that you guys have a better clarity on the charts that I'm going to share with you all in a couple of seconds time. All right, over here. Okay, so let us start with the FX market first. Okay, starting with the FX market over here, let us start with the kind of intermarket correlation that could impact the broad-based dollar strength. So we know that the dollar, the US dollar strength in the last 3 to 4 weeks has been pretty much driven by the push up in the longer term US Treasury yield, which is the 10-year US Treasury yield. So the US 10-year Treasury yield from September, mid of September, all the way up to last Friday, it pushed up and hit this key major resistance inflection level of 4.4%. Why this level is key? Because it's actually the major descending trend line that prevent further rallies since 26th of April, starting from the major swing high of 20th of October, where it hit the psychological level of 5%. All right, so last Friday, it's hit this level, and on Monday, it fails to break out and starts to inch down lower, trading in line with the thinning of the winning odds of Trump winning the White House, as indicated by Polymarket, the betting market that I shared at the start of this session. And this push down in the US Treasury yield yesterday also saw some form of lethargic movement on the US dollar index as well. So yesterday it attempts to break below the 200 and the 20-day moving average, but managed to survive at the end of yesterday's US session. All right, so there was an intraday break, but managed to survive it by the close of the US session. So managed to close right above 103.76 level. So with that, we know that the dollar strength has started to get dissipated. So at least in the short term, let's take a view of what is cooking for the euro dollar. So for the euro dollar on the hourly chart, right, yesterday we flipped to a bullish bias because the support level has been made after that bearish bias that we have on last Friday, taking into account of the exposed NFP impact. Price action rallied during the start of the US session, continues to have that positive momentum until the start of before the start of the US session at around the 9 p.m. Singapore time mark, hit our first resistance at 1.0915 before shaping that pullback, but managed to survive at the 200-day and the 20-day, acting as a key intermediate short-term intraday support at this 1.087 level mark over here. All right, so oops, let me put it in green. Why is not showing green? Okay, green over here. All right, so with that, still no change. I will still use 1.0850 / 1.08840 as my short-term pivotal support level, still maintaining that intraday bullish bias on the euro dollar, given the fact that there's still a short-term positive element that are still intact right now. First intermediate resistance to watch for today on the intraday, still no change. The first one will be 1.0915. Above it exposes 1.0955, which is the minor swing high area of 10th of October and 11th of October. Only hourly close below 1.0840 will invalidate today's intraday bullish bias on the euro dollar to see it inching down much lower to expose the next near-term support level at 1.08, followed by 1.077 next. Okay, these are the two key support level, and the medium-term support level to watch will be at 1.0750. So what is this 1.0750? Is very important. So 1.0750 is in fact the major symmetrical triangle lower limit support level since the low of 3rd of October last year. So it's almost a year of support, right? That was being we call it derived, okay, on the daily time frame chart. So now going forward will be the sterling dollar. So the sterling dollar also yesterday almost hit our first resistance at this 130.15 before it traded down and bounced off from our first support level at 1.2940. All right, so still no change, still using 1.2910 as my short-term pivotal support level, still maintain that intraday bullish bias on the sterling dollar. The first resistance level to watch remains unchanged at 113.15. Only a breakout above 113.15 may potentially seize the next near-term resistance coming in at 130.60, which is the minor congestion area of 16th of October and 18th of October. Only a hourly close and a push down below 1.2910 invalidate today's intraday bullish bias on the sterling dollar to potentially see it revisiting the minor swing low of last Friday at 1.2860, followed by 1.28 figure level, which correspond to the key 200-day moving average, I think as a similar support level as well at 1.28 figure level. Now, with that, let us now focus our attention to the dollar pair against the Asia Pacific currency, starting with the Aussie dollar first. So we know that Aussie dollar today will be a key risk event that is potentially could impact the Aussie dollar, which is RBA meeting outcome. Later I'll share more about it. So still no change. From a technical perspective, the key support level to watch remains at 65.70, where in today's Asia session, it almost test the upper limit at 65.80 before shaping a rebound. So the hourly RSI continues to remain supported by this ascending trendline support that I drew from the low of 30th of October. So yesterday it failed to actually break out our first resistance level at 66.15, which also correspond very close to the 200-day moving average. So still using this as a key level to watch. So 65.70 short-term pivotal support to maintain that intraday bullish bias, but price action got to break up above the 66.15 level in order for the bullish bias to gain more traction to expose the next near-term resistance at 66.60, which also correspond to the downward sloping 20-day moving average. So net overall, given the fact that if you look at the daily chart, right, it's still being trapped inside this major range configuration since the low of 30th of October last year. And right now it's more like doing a mean reversion rebound within this kind of major range configuration to revisit the 20-day moving average before inching downward to test the lower limit of this symmetrical triangle major range configuration. Support level will be at 63.90/63.60 level mark over here. So overall, in a very bigger term picture, there could be still much more multi-week time frame. There could be still more potential downside on the Aussie dollar. So whenever we see some form of positive technical element right now, in my conviction right now, is more of a short-term intraday rebound perspective rather than the start of a multi-week recovery for the Aussie dollar. Okay, just from a technical perspective, I'm seeing right now. So only if we start to see a breakdown below 65.70, that means an hourly close below it, then this intraday bullish bias will be invalidated to see the continuation of the impulsive downward sequence to revisit 65.40, which was last Thursday, minus swing low area. A breakdown below 65.40 exposes 65.20/65.10 next. So that's for the Aussie dollar. Okay, turning our attention will be the dollar yen. So the dollar yen yesterday came down and hit our first support level, which is the key 200-day moving average, tested it before shaping that rebound during the US session. All right, so right now it's actually trying to actually cover the gap resistance that was actually the gap down during yesterday's Asia session at this 152.60 level. So still no change. 153 will be our short-term pivotal resistance level to maintain the intraday bearish bias on the dollar yen. First support level to watch again will be 155.55. A breakdown below 155.55 in first step is likely or may expose the next near-term support zone at 150.60/150.30 next. Only hourly close and a breakout above 153 figure level will invalidate today's intraday bearish bias to revisit this swing high area that has been tested since 28th of October but failed to break above it at 153.80. Only a breakout above 153.80 potentially sees the next resistance coming in at 154.70/154.80. Okay, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar FX pair. So there's this particular FX cross pair that I want to mention with you all. Highlight to you all that's also in line with the upcoming RBA monetary policy meeting that's going to be soon in about 2 hours time will be the Aussie Kiwi FX cross rate. So this Aussie Kiwi FX cross rate has really met the support level of this. It came down on last Monday, hit the support level of this medium term ascending channel support that I drew from the low of 9th of September. Okay, and it staged a bounce over here. Hourly RSI continues to print out a series of higher low, hasn't hit the overbought zone yet, indicating some form of positive intraday bullish momentum that is still intact on the Aussie Kiwi cross pair. So I'll be using 1.099 as my short-term pivotal support, which is the minor swing low area of 1st of November and 31st of October, and as well corresponding to the lower limit of this medium-term ascending channel support that I highlighted to you earlier on. Bullish bias for this Aussie Kiwi cross pair using 1.0990 1.0990 as my short-term pivotal support. First resistance zone to watch will be at 1.1075/11090. Above it, expose the next resistance at 11150, which is so a 0.618 Fibo extension level and correspond to the minor swing high of 30th of July. Only an hourly close and a breakdown below 1.099 will invalidate the intraday bullish bias on the Aussie Kiwi cross pair to see a slide to expose the next near-term support level at 1.0945. We also correspond to the 50-day moving average, acting as a similar support level as well. So this is one interesting FX cross pair that we can monitor, Aussie Kiwi. Okay, so with that, let us now focus our attention to the short-term intraday technical analysis on the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 right now, it shaped a push-up and it come close to the short-term pivotal resistance that we highlighted earlier on yesterday at 2085/2150 over here. All right, so with that, still maintain that intraday bearish bias on the Hong Kong 33. First support level to watch will be at the 20,150. So only a breakdown below 20,150 will see a further potential weakness on the Hong Kong 33 to expose the medium-term pivotal support zone at 19,790/19,445, which correspond to this rising 50-day moving average as well. But however, if we start to see a breakout above 21,050, then today's intraday bearish bias will be invalidated to see a further squeeze up to test the next near-term resistance at 21,550 in first step. Okay, so that's for the Hong Kong 33. Now, turning our attention will be the Japan 225 or the Nikkei 225. So the Nikkei 225 continues to trade in a series of lower high yesterday over here. Okay, what was it? Okay, still lower high. Okay, so still no change, still using the 38,940 short-term pivotal resistance that we highlighted yesterday. Maintain that intraday bearish bias for the Japan 225, i.e. Nikkei 225. First support level to watch that has been tested yesterday in today's Asia session will be at 38,207. Only a breakdown below 38,207 may expose the next near-term support level at 37,780/37,395. So overall, from a multi-week perspective, the Japan 225 is still being trapped in this very complex range configuration since the low of 27th of September. All right. Only an hourly close above 38,940 will invalidate today's intraday bearish bias to see a potential push up towards the upper limit of this medium-term complex range configuration. The next resistance level to watch in near term will be at 39,550/39,680. So that's for the Japan 225. Now, flipping our attention will be the German 30, one of the major European stock indices. So for the German 30 or the German DAX, price actually reacted negatively right below our short-term pivotal resistance zone that we highlighted yesterday. 19,320/19,370 hit the first support level before bouncing up throughout the US session over here, 19,110. So with that, still no change, still using this 19,320, 19,370 as my short-term pivotal resistance level. I don't want to put it so tight given this impending key US risk event that is coming up. So 19,320, 19,370 still maintains as our short-term pivotal resistance level. Only breakout above it, then would invalidate our bearish bias. So for now, support level to watch 19,110, followed by 19,020. Okay, only a breakdown below 19,020 exposes the next support level at 18,960 next on the intraday basis. So if we start to see an hourly close above 19,370, then today's intraday bearish bias will be invalidated to see the price action pushing up with the first intermediate resistance coming in, okay, at this congestion area here. 19,514, above 19,514, potentially revisit the all-time high area at 19,690 / 19,755. So that's for the German 30. So with that, our US major stock indices, starting with the Wall Street 30, the Dow Jones Industrial Average. So the Dow Jones Industrial Average continues to push down and print a lower low and hit the support level that we highlighted earlier on, 41,790 at this point in time. So still no change, still using 42,325 as my short-term pivotal resistance level. First resistance level to watch potentially for today will be the 50-day moving average, I think, as a resistance at 41,990. So as long as any bounce didn't surpass 42,325, we will still maintain that intraday bearish bias on the US Wall Street 30. Next near-term support level to watch will be at 41,560. All right, so only a breakdown below 41,560, which is the congestion area of 29th of August and 17th of September, may expose the next near-term support level at 41,165 / 41,000 figure level. Only a hourly close above 42,325 will invalidate today's intraday bearish bias to potentially see a short-term intraday recovery to expose the next near-term resistance zone of 42,580 / 42,720, which correspond to the 20-day moving average as well. Now, turning our attention will be the NZD 100. So the NZD 100 continues to trade sideways below our first resistance level at 20,155, hit our first support level at 19,910 before trading sideways. So still no change, right? I don't want to type my short-term pivotal resistance to at 20,155 just in case of any spike due to this upcoming key risk event. Still use the 20,306, which is correspond very close to the 20-day moving average as well as my short-term pivotal resistance level. 20,306 still maintain that intraday bearish bias. First support level to watch 19,910. A breakdown below it exposes 19,810 next, which is correspond to the 50-day moving average, I think, as a near-term support level as well. Only a breakdown below 19,810 may see a further weakness, intraday weakness, for the next near-term support to come in at 19,635. All right, only an hourly close above 20,306 will invalidate today's intraday bearish bias to see a short-term recovery for the next near-term resistance zone to come in at 20,560 / 20,615 over here. All right, so that's also sum up the intraday technical outlook on the broad-based cross asset classes, on the broad-based stock indices, pardon me. All right, so with that, now let me now touch on the commodities market, starting with gold first, XAU / USD. So for gold XAU / USD, due to yesterday's bearish price action on the daily time frame on last Friday, we flipped to a intraday bearish bias. So price action came down, hit the lower limit of the first support zone that we highlighted, 2,728 / 2,715. So still no change, right? I do not put my short-term pivotal support too tight at the first resistance level of 2,758. So still using 2,774 as my short-term pivotal resistance level. Still looking for this ongoing mean reversion decline scenario to take shape within its short and medium-term uptrend phase that is still intact. So still maintain that intraday bearish bias using 2,774 as my short-term pivotal resistance level. A breakdown below 2,715 exposes the next near-term support zone at 2,684 / 2,667 next over here. Only a push-up with hourly close above 2,774 will invalidate today's intraday bearish bias to kickstart another impulsive up move to expose the next near-term resistance level at 2800/2826, which correspond to a Fibo extension level, and as well as the upper limit of this minor ascending channel that is still intact since 8th of August. Right, so that's for gold, XAU/USD. Still maintain that intraday bearish bias for this potential minor mean reversion decline scenario to play out below the 2774 short-term pivotal resistance. Now, let us focus now on the West Texas crude oil. Lastly, okay, let me open up my chart. Okay, so for West Texas crude oil, it continues to inch higher after this Sunday. Okay, the recent Sunday news flow where OPEC Plus starts to delay its supply output hike again. So right now it managed to actually test the first resistance level at 72.24 level, 72.24 level, hit the first resistance level. So net overall, the price action on the RSI continues to shape a higher low. Probably could see over here a higher low. Okay, so no signs of upside momentum waning, and also it hasn't hit the overbought level yet at this juncture. So still no change. First support level to watch will be this upper limit of this gap support over here at 70.84 level. So still using this 6950/6885 as my short-term pivotal support level or support zone. Still maintain that intraday bullish bias on West Texas crude oil in any potential minor pullback. Next resistance level to watch after 72.24 will be at 73.15. So a breakup above 73.15 potentially may expose the next near-term resistance level over here at 75.20. All right, 75.20 next. Oops, put it in red. And this 75.20, if I will do a Fibo retracement, taking into account of the last sell-off from 8th of October all the way down to the low of 29th of October, that correspond to very closely to the golden ratio of 61.8% as well at 74.60. All right, so still maintaining that intraday bullish bias on West Texas crude oil. Only a push down with an hourly close below 68.85 will invalidate today's intraday bullish bias to revisit the lower limit of this major descending triangle range support level at 67.55/10, followed by 65.70. Okay, so that also sum up the intraday technical outlook on the broad-based cross-asset classes. So before we go, let's take a look at the calendar. Other than RBA meeting that is due around 2 hours time over here, what are the key data to look out for? So okay, in fact, no. Okay, okay. In fact, the interest rate is really done. So it maintained at 4.35%. Pardon me. So still no change coming in with market expectation. So it's the press conference that we are pretty much concerned as well at 12:30 p.m. Singapore time, where the RBA governor will be quizzed on will she still maintain a slightly hawkish stance, because in the last few meetings she still keep mentioning there could be a risk of we call it a services inflation resurging into Australia, so that causes RBA to be rather unreluctant to cut rates at this juncture. All right, so far the RBA is the only developed nation central bank that has yet to cut interest rate, excluding Bank of Japan, which is a totally different ball game, different creature. Then during the US session, everything will be pretty much quiet. At 10:30 p.m., we have ECB Press Lagrange public speech. And also one important data to look out for will be 11 p.m. Singapore time will be the ISM services PMI data. And also watch out for any potential news flow at around the end of Asia session between 4 p.m. to 5 p.m. on any potential media that would report any findings from the second day of the MPC, China MPC Standing Committee meeting. And for sure, at tomorrow early morning, around 6 a.m. or 7 a.m., we will start to see some of the states reporting some of their polling result pertaining to the US presidential election. All right, so with that, do have a great day and restful day ahead as we actually head into tomorrow pivotal US election outcome. With that, this is Kelvin here signing off for today's Daily Dose session, and we shall speak again tomorrow. Thank you.